Good morning, ladies and gentlemen. I'm Steve Harney, the founder of Keeping Current Matters. And today, in today's deep dive, we're going to do something a little bit different. Usually what we attempt to do is give you like a real good understanding of a particular item in our business, and then a way how to increase your business by really understanding that item and using the tools that we give you in that regard. This today is not that. We're not going to be giving you tools. We're not going to be giving you like a plan that this is what you're going to go do to increase your business. This is all about your brand. Now, I'm hoping that most of the people on this call understand that to be considered a great real estate agent, your brand has to be that you're a trusted advisor, that people can come to you with their challenges, and whether they're buying a house or selling a house, and that you're going to have the answers. You understand what's taking place. So this today is going to be all about your brand, because what I'm afraid of is that in the next couple of weeks, you're going to get hit with a lot of questions about a particular item that is gaining a tremendous amount of momentum in the news. All right. And that's the whole concept of institutional investors and how much of American homes do they own? How many American homes do they own? So we have a lot of crazy stuff going on right now. We have a prominent presidential candidate saying that institutional investors in a couple of years are going to own 60% of all the homes in America. And he's running on that platform. Right? We have in Congress right now a bill saying that institutional investors are going to be not allowed to own a home, and they're going to have to sell off their current inventory in the next 10 years. So all of that is creating a lot of discussion. And I think that discussion is going to hit your dining room table, your house of worship, your cocktail parties when you go to your spouse's cocktail party over the holidays. That discussion is going to be up and come up. And if you're a real estate agent, they're going to expect you to have some knowledge of that. You can't say, well, I don't understand. It's not there. What are you talking about? Because this is a hot item. It's not necessarily hot to our industry, and I'll explain that to you why, but it is it is at the heart of what the consumer is talking about right now. So again, what I want you to be able to do when you have these conversations over the holiday, I want you to be able to nail them. Because again, you build your brand. Oh, I understand exactly what you're saying. Let me tell you exactly, truly what's taking place. All right? Today's deep dives, it's the truth about institutional investors. And I'm going to break it down into questions, like questions that people might ask you over the holidays. Number one, do institutional investors currently own a large share of homes in this country? Well, first off, I want you to understand what an institutional investor is, because sometimes people get that mixed up with all investors. Basically, there are four categories of investors. There's the mom and pop investor, the guy who lives next door that bought a house around the corner. The guy around the corner who bought the house next door to him because he wanted to have a house when his kids grew up, they have a place to live. There are people that make a little side business, a side hustle. They might have 2 or 3 houses, all right? And they're mom and pop investors. We're not talking about them. The medium-sized investors own from 10 to 99 homes. Large investors, and these are categories used in the industry, large investors own between 100 and 999 homes. Institutional investors, by the actual term, own 1,000 or more homes. So when they're talking about institutional investors, in reality, the definition is 1,000 or more homes. But I don't think that's the definition people are using when they're talking about that. And I don't even think that's the definition they're using when they're talking about, proposing a bill, or the bill has been proposed about institutional investors. So what I'm going to do is I'm going to take not the mom and pop investors. We're going to take them off to the side. They're definitely not going to be included in anything. But I'm going to take the medium-sized, large-size, and institutional investors and almost count them as institutional investors for this deep dive. Because I think that's the thinking of most of the people that are talking about it. People who own a lot of homes. All right? So let's do the breakdown. Do they own a lot? Here's the actual breakdown, ladies and gentlemen. The investors that own between 10 and 99 homes own 2.2% of the homes in this country. The ones that own between 100 and 999 own a half of 1%. And the institutional investors, the true institutional investors that own over 1,000 homes, they own just over 0.5%. So there's this theory out there that they own 30, 40, and they're going to go up to 60%. That's not happening. That's just an error. If we add all three of those together, we come to 3.4%. So not just the institutional investors, we'll take them, we'll take the medium-sized investors and large-sized investors, and together they only own 3.4%. And let me put that to you in a graph so you can really visualize it. Now remember, the mom and pop investors we're including in that 96.6% because no one's going after them. They're going after the big banks, the Wall Street firms, the hedge funds. That's who they're trying to go after. So what we're seeing here, they own a very small slice of all the homes in America. So we want to start there. This is not going to be like there's going to be millions of homes coming onto the market, all right, if that happens. But I think that there are some consumers that believe that. They believe that the institutional investors own this big swath of property, and that's the reason that they can't buy a house or the child can't buy a house. Their adult children can't buy houses because all these big Wall Street firms have bought all the houses out from underneath them. Well, that's not necessarily true when we look at the numbers. The other question that comes out is there's a lot online right now saying that have institutional investors bought 40+% of all the single family homes over the last 3 years, as has been speculated. This is rampant over social media, that over the last 3 years, 40% of all the homes purchased in this country were purchased by speculators, institutional investors, actually. And that's just not true. It's not even close to being true. Well, how did that number even come out? Well, where I could find it, and I tried to do as much research as I could, this was a TikTok. This gentleman put a TikTok, and he's the only person I could find that said that originally said it. I'm trying to look for the origin. Said that 40% of all the homes in this country over the last 3 years were purchased by institutional investors. I have no idea where he got that information from as far as for 3 years, but let me go to where I think he might have got it from. But before we go there, take a look. This was somebody sharing it on Twitter, and he got 2.4 million views on the share. He got tens of millions of views telling people that all these institutional investors are the ones that are coming after you. They're buying all the properties so you can't buy them and your children can't buy them. And the government's going to come in and we're going to hold their feet to the fire and make them sell all those properties. That went viral, and I read a lot of the comments there. And there were a lot of average Americans saying, oh, thank God, now I have a chance. But ladies and gentlemen, this gentleman didn't have any idea what he was talking about. The only thing I could come close to is this MMA fighter up in the upper left-hand corner retweeted something from a place called Medium News. And what that said was that 44% of all single-family homes purchased were by private equity firms in 2023. So he wasn't talking about 3 years. He was talking about this year. And that came out a couple of months ago. If you look at the article, he was really talking about the first 3 months of this year. So he's saying 44% of all the single-family homes purchased were by private equity firms, the institutional investors. So I'm looking at that and I'm saying, wait a second, that's not true either. So I went to the report itself, and what I found out in the report, they linked to 2 different articles. Neither of the 2 articles say anything about 44%. So whoever this person is, and they go by the name Homeless Romantic, all right, they came out saying that 44% of all single-family home purchases were made by private equity firms in 2023. Someone else jumped on and said, for the last 3 years, all the private equity firms are buying 40% of the houses. Neither of those 2 things are true. And I don't want you to trust me on that. Here are 2 reputable people. Lance Lambert is News Lambert on Twitter. He's the former editor. He left to start his own firm. He's the former editor for real estate for Fortune magazine. He said the stat below is fake when he showed the 44%. Not even close to true. institutional operators, those owning at least 1,000 homes, own 0.73 of the single-family home stock, 1 in 137 homes. Then John Burns, another reputable person, consultant in new construction, good grief. This is how public opinion is formed, leading to legislation to win votes. A professional fighter with 559,000 followers tweets an article with an inaccurate headline written by a synonym, I can't say that word, homeless romantic. The result is full employment for lobbyists. So both of these people are saying that that article had made no sense whatsoever at all. So then I said, well, let me make sure that's true, that that article made no sense at all. So I went to John Burns' consultant and said, all right, well, what are they saying? Because they actually do research on this. Ladies and gentlemen, this is the first half of 2023. The homes purchased, of all the homes purchased in the first half of 2023, 76.7 were purchased by people like you and I, regular people buying a home that is their primary residence. 19.6 were purchased by mom and pop investors. 2.7% were purchased by those owning properties between 10 and 99 properties. Between 199, 0.7% were purchased in the first half of this year. And in the institutional investors, they didn't buy 40% of all the homes over the last 3 years. They didn't buy 44% of all the homes in 2023, the first half of 2023. They bought 0.3% of all the homes. So I want you to understand that all of that information is just wrong. Institutional investors are not buying all the houses up in America. That's just not true. But now let's talk about how that is able to, grow legs and run through the social media. First off, Thomas Malone, the economist at CoreLogic, who looks just at this, investor purchases, this is what he said. As a total number of investor purchases declines, smaller investors are growing their market share. Typical housing market investors are becoming more and more likely to operate smaller scale, owning 3 to 9 properties. Throughout quarter 2 of 2023, large and mega investors showed muted activity. So not only are they not buying more houses, they're actually buying less houses, those institutional investors. Now, even if we take a look at institutional investors, like, why is the government getting involved? Why are they passing, proposing legislation to, prohibit these people? Well, we have to understand that the economy is doing relatively well in all manner. It looks like we're going to bypass a recession. It looks like we are going to have that soft landing, everyone said. Maybe if we do have a recession, it'll be a mild recession. So the economy is doing very well. But if you look at consumer confidence about the economy, it's not good at all. And what politicians are realizing is the reason that people don't feel good about the economy is because of housing. Either they can't buy a house or their adult children can't buy a house. And that has them upset. So now, when a politician has a voting contingency upset, they have to do something about it. And sometimes, I'm not saying maliciously, I'm not saying that they did this knowingly, but they see all these headlines and say, that's the problem. The big guys are the problem. And what everyone always talks about is BlackRock. Is every single family home owned by institutional investors denying a family their chance at the American dream of home ownership? And who they point to is the person, the company in this picture on that article I showed you. You'll hear it all the time. BlackRock did this and BlackRock did that. No, I'm not here to support BlackRock. As a matter of disclosure, I own no stock in BlackRock. I do have a 401k, so maybe somewhere along there, there's a minor ownership because I didn't check through every single stock in my 401k portfolio. But I own no major interest in BlackRock. I don't care about what happens with BlackRock. But the point of the matter is BlackRock's not even the challenge. BlackRock itself doesn't own any single family homes. They didn't buy one. I shouldn't say they don't own any, they didn't buy one because this is directly from their site. Other U.S. real estate investments. They additionally, BlackRock invests in multifamily properties, apartment buildings, apartment complexes, multiple buildings, and other residential real estate. And the residential real estate they invest in, ladies and gentlemen, they do build to rent. So we'll talk about that in a second. BlackRock is an active investor in the U.S. real estate market, but we are not among the institutional investors buying single-family homes. They don't buy single-family homes. So the person that they're pointing to isn't even in this game. Now, what they do, they own some single-family homes because they build them. They build developments, and they call them build to rent, with the same way you would have a development where people can buy the houses and they have amenities and they have to park for the kids in the pickleball court and the pool. Well, now builders are building those for renters because they need to show them that. All right. So I want you to understand that what winds up taking place is they are adding inventory to the market, not taking inventory away from the market. They're building so renters could move into their development, and that leaves more single-family homes to be purchased. So it's the exact opposite of what they're being accused of. Now, out of fairness, this is BlackRock. BlackRock split up several years ago, and there's a company called Blackstone. And I want you to understand with Blackstone, hold on one second, I'm sorry. With Blackstone, they do, all right, own and purchase residential properties. So BlackRock does not, but Blackstone, which was somehow affiliated with it years ago, was a spinoff, they do. So I just want you to understand it's Blackstone people should be talking about. And I understand, here's from Reuters. Blackstone raises $30.4 billion for the latest real estate fund. And people ran all over that, saying, you see, they're raising all this money to buy all the houses in America. Well, ladies and gentlemen, let's take a look at that for a second. I found an interview with Kathleen McCarthy, the global head of real estate for Blackstone. So Blackstone, who does purchase single-family homes, this is what she said. If you just look at our portfolio, about half the portfolio is concentrated in warehouses and student housing and data centers. I highlighted student housing. These are sectors that are having high cash flow growth, and cash flow growth is really the strongest mitigant against a higher rate environment. So what are they saying? They're turning around and saying, we raised a bunch of capital, and the main reason is we want to get involved in student housing. So they raised $30 million for all of those investments, the warehouses, the student housing, and the data centers. So they raised $30 million. They spent more than 1/3 of that already in housing. Which housing? They bought a company that does student housing all across the country. Now, student housing has some houses, and something that I wasn't aware of, dependent on the college, 60 to 80% of the students who attend that college do not live on campus. They live in the neighborhoods around the campus, some in apartment buildings and some in single-family residences. So that housing stock, student housing stock, that all came up for sale by a company, American Campus Communities, who had been doing it for years. And Blackstone purchased that company. That's where they spent their money on residential. Now, we can make an argument that, well, maybe some of those single-family houses around the colleges shouldn't be for students. I'm sure there are some neighbors that say, no, they have wild parties on Saturday night. Well, ladies and gentlemen, it's not that they took houses away. What they didn't go out and buy a house that someone else was trying to buy. These were student housing homes already. They just switched ownership. So again, maybe they should give them up, but the question I would ask you is, if they did that, where are the students going to live? So we have to realize that some of the craziness that's being talked out there isn't as crazy as it seems. Yeah, they own homes. First of all, BlackRock doesn't own any homes. They build homes, so we have more inventory. Blackstone does have some residential properties. And I'm sure that they purchase others also. But the mainstay of what they do is campus housing. Is there still a need for single-family rental homes for those who can't own or have no desire to do so? That's another question I have. If anyone knows me, you know I'm a very strong believer in the power of home ownership, both from a financial and non-financial basis. Home ownership is very dear to me, and I want to make sure that any American or any American family that is ready, willing, and able to buy a home, they have a home to buy. I spent 35 years of my life with that. But I also realize there are some people that are not going to buy a home for a multitude of reasons. If you're a professor at a college, but they're only giving you a 3-year contract because they're trying to get something done, or a research analyst, you're not going to buy a home and sell it in 3 years. You're going to rent a home. There are many families that decide, and we always hear this, I don't want to deal with the maintenance, I don't want to deal with this, I don't want to deal with anything, I want to rent instead of own. Where are all those families going to go if we take all the single family rentals off the market? So not that I'm this gigantic supporter of families that rent. That's not where I went in my career. I'm a big supporter of home ownership. But I realize that there are many families, many people that want to rent a home, and it be a home, not an apartment. As a matter of fact, Robin Young, the head of market research for Buildium, which is a property management company, what she just said is multi-generational households and couples with kids are the two fastest growing household types in the population of renters that Buildium surveys. Although couples with kids remain the most common type of household in our sample, families are quickly catching up thanks to the growth of two household arrangements, families with kids and parents with adult children living together in rental housing. So what are we saying? 25% of rental homes, single-family rentals, are rented by multi-generational households where the parents live with their adult children and their grandchildren. Now, for whatever reason, it could be financial, it could be some other reason, they don't want to buy. Where are they going to go? If we wipe out all the single-family rentals, where were they going to go? Couples with kids, that's 18% of the entire population. And that's also rising, meaning that percentage is increasing year over year. If you're a couple with 3 kids, you don't want to move into an apartment. No, again, I would sit with that couple and try to figure out if there's any way they can buy a house, because that's what I believe in. What if that's not what they believe in? They should have the right to be able to find a decent place for their family to live. So I'm a little bit confused about this. Well, we can't have any single-family rentals anywhere in the country. We're going to take them all away from the institutional investors. Well, those institutional investors are providing a home for college students, for multi-generational households, for families with kids. We have to think about that. Now, again, let's go back to that 40% because it really bothered me. Where did the 40% number come from? So I want you to see, I think I figured out where it came from. Will institutional investors own over 40% of all single-family homes by 2030, as has been reported? And ladies and gentlemen, here's a report from the news network, The Hill. 40% of rental homes may be owned by institutional investors by 2030. That's the title. And it was based on, if you look at the very top, MetLife Investment Management Study. I went back and found the study because I couldn't believe that's what they were saying. I went back and found the study and realized what the mistake was. And I could understand where people are now coming up with 40, 50%. It was based on this MetLife study. Now, if the MetLife study was right, this is what would have happened. On the left, the pie chart on the left is today. About 75% of all the homes are owned by owner-occupiers. Smaller investors, not institutional investors, that means the mom and pop investor, the medium investor, and the large investor, own about 24.3%. Institutional investors, as I've told you before, own less than 1%. What people, when they looked at that MetLife study, say, well, they're going to own institutional investors, not large and medium. Institutional investors are going to own 40% of all the homes in this country by 2030. That would be the pie chart on the right. What they're saying is that the small investors is still going to be there, but the institutional investors are going to own 40%, and the owner-occupiers are going to go down to 35.7. We're going to become a rented society. For the first time in history, or any recent history, we're going to have more people that rent than own. And if that was true, I could see the politicians going crazy over this. But wait a second. Is that what the MetLife study said? So let's go back to what I just showed you, because I missed it the first time, and maybe some of you did. What the MetLife study said is 40% of rental homes may be owned by institutional investors by 2030. Not 40% of all homes. This is the same thing I showed you here. Now, the first time I saw that, I read 40% of all homes. But in reality, it was of rental homes. Now, how does that change the dynamic? Pretty dramatically. Here's today all the way to the left. Here's the misinformed one I was showing you. Well, if they own 40% of all the homes. But in reality, what they said is they are going to own 40% of the homes that are already in investor homes. So the original 25% that were investor homes, they're going to own 40% of that 25%. 40% of 25 is 10%. So then they're not going to be eating into the owner-occupied properties. What they're going to do is on the medium and large size brokers, they're going to gobble them up, like this happening in every business. The mom and pop is always going to be there. They might sell some of their properties to the institutional investor. But what the institutional investor is really considering or really looking for is a company that owns 100, 200, 300 properties, and they're going to buy them. They're not going to be taking them out of the market. They're already out of the market. It's just switching ownership. But because that's confusing the way a lot of people say it, and now it's got legs and running, and again, there is a bill in front of Congress saying institutional investors should not be able to own homes, and over the next 10 years, they have to sell every single one of them off. The student housing, the housing for families, the housing for multi-generational families. That doesn't make any sense, ladies and gentlemen. It's not a big number. Now, of course, we can make the argument that any number is a big number. And I get that. If they own two, that's two houses that a family can own. That's also two families you're evicting. Well, you know, a lot of people that live around the colleges don't like the kids living in, you know, in their neighborhood because it's, again, Saturday nights having all these parties. Well, yeah, I get it. You know, like maybe we could tell those kids, you're out, where are they going to live? There's a housing shortage in this country, ladies and gentlemen. As a matter of fact, Bank of America came out just a couple of days ago saying we're 4 million houses short. That's what the challenge is. We have to build more houses. I don't think it's that we have to take rental houses that people are living in and throw them out and turn them into houses that people can buy. And again, I've dedicated my life to home ownership. But even I don't think that. You're going to make your own decisions on this. And I hope well, this is what I know for sure. If you think you understand where I stand politically, that's amazing, because I don't even understand where I stand politically anymore. So if you think you have me figured out, please send me a text message or something, or send me an email and let me know, because I'm confused to where I stand on the political spectrum right now. So this isn't a political thing. What I'm saying is politics on both sides might be using an issue to win over voters, and they're creating like almost a boogeyman that doesn't really exist. Now, again, I'm not on the side of big corporations and saying, well, I believe in it. I'm not saying I don't either. It's a capitalist society. Companies can get as big as they want to get. But I'm not siding with them. I'm not siding with anyone. Except for maybe the families that own houses and the families that depend on a good rental to raise their kids. Now, that being said, I do want to let you know that it is a challenge in certain parts of the country. As a country overall, it's not a challenge. But what we found is that the institutional investors are really concentrating on certain cities. Like some parts of the country is not an issue at all. They're not even there. But this is from Jason Louris, the co-founder of Parcel Labs. National numbers can be misleading here. The largest operators concentrate in the same markets. There are many zip codes where large operators own more than 1 in 10 homes. That's a challenge. I get it. The top markets these 1,000+ unit portfolios concentrate include Atlanta, Dallas, Houston, Phoenix, Charlotte, and Tampa. Nationally, the impact is small. Locally, the impact can be huge. So there are certain parts of the country that this is an issue. It's not an issue overall. It's like home prices have come back this year. Well, not in Austin. But that doesn't define the whole country. Overall, institutional investors owning homes don't own anywhere near what is being reported they own. But in these cities, you want to take a look at that. And if you want to narrow it down, KCM is not the place to do that because we don't get really down into the weeds on this issue. We're trying to give you an overview, get you prepared for the questions you're going to get over the holiday weekend so you can build your brand as a trusted advisor. Because when someone asks you a question about a key issue in the real estate industry, you know it. These are the two people you should be paying attention to. Lance Lambert, again, the former editor, real estate editor for Fortune magazine, who's created his own company called Residential Club. He really looks at that. And he works in cohort, with Jason Louris, who's the co-founder of Parcel Labs. Together, they can give you a real good understanding of how does this affect your local market. So, again, I apologize. Follow them on Twitter, X, whatever you want to call it, and you're going to get a lot of good information. What I wanted to give you today is an understanding that this monster that seems to be coming out of the shadows is really a very, very small thing in comparison to what it's being made out to be. Again, your brand is the most important thing to us at KCM. Most agents know what's happening. Good agents understand what's happening. Great agents, the agents on this call, they can explain what's happening. That's what we gave you today. An explanation of what is actually happening with institutional investors. You're going to get those questions over the holiday weekend. And for the rest of next year, it's an election year. This is going to become a political football. I want to make sure that you have the information you need to intelligently articulate what's actually taking place. Again, I don't think you should get into arguments about it. You should just be the information source for a lot of information on it. That's what we promise you we do here. Now, before we end, and we're going to be end in a second, I just want to tell you one more time, this political football, you don't want to get involved in the politics of it. But I want you to have great information, because going into 2024, the single most important thing that you can have is a strong brand as a trusted advisor. You know what's happening. They can come to you to get the solutions to their challenges regarding what's happening, whether they're buying or selling or renting a home. Ladies and gentlemen, thank you so much for spending this time with us today. As I always tell you, you gave me a half hour of your life. I hope we gave you a great return on your investment. We're off now for the holiday season. We'll be back on January 8th, and we'll let you know before that what the next deep dive is going to be on. We haven't decided yet. Might be on mortgage rates, the way things are going, but we'll let you know that. Until then, have a great holiday. Enjoy yourself. And remember, trusted advisor. That's your brand.